Welcome to the webcast jointly organized by Indian Merchant Chamber and Bombay Chartered Accountants Society on the important topic of recent charitable trust, recent developments. Looking to the large response which we have received, about more than 1,400 participants have been registered for this program. We know how complex provisions are and how complex provisions were and how complex provisions are going to be after the new Income Tax Act has been there. And the practical difficulties which were faced by many charitable trusts, including some of the critical decisions. I wouldn't say anything more than that. Some High Court had to step in to reverse those decisions taken by Exemption Commissioner. So therefore, keeping that in mind, the complexities involved, we felt that let us have a webinar, a webcast or webinar, whatever we call it, wherein we have three experts with us. The Noshir Dadrawala, who is also well known for the field, then Anil Sathe, who is also expert in this, and to be moderated by Gautam Nayak. So this is the program for today. And without taking much of time, and there is a lot to say about how NGOs have been treated, NGOs as per the NPOs as per the Income Tax Act, how they are uncharitably treated by the Government of India or for the Income Tax Act. I think for every, whether it is the provisions or the implementation or for the purpose of tax assessments or scrutinies. With this, I will hand it over to Deepak, Chairman of the Direct Tax Committee of Bombay Chartered Society, and then he will take it forward and hand it over to the speakers. Thank you.
Thank you, Rajan bhai. Good afternoon, everyone. Once again, on behalf of Bombay Chartered Accountants Society and Indian IMC Chamber of Commerce and Industry, I extend a warm welcome to all the participants who have enrolled in such large numbers for this webinar on charitable trust recent developments. As Rajan bhai has started the ball rolling and explained how crucial this topic is, and this is very important in the days to come. So today's session, friends, has been specifically designed with a practical approach rather than a purely theoretical discussion. Our esteemed panelists, who have vast experience in handling trust matters and departmental proceedings, will share valuable insights on charitable trust recent developments, and also will touch upon Maharashtra Public Trust Act and FCRA regulations also. Friends, I am confident that next 2 hours will be highly enriching, informative and full of practical guidance from experienced professionals who deal with this issue on a regular basis. With this, I would request Vishesh Sangoi, convener of Direct Tax Committee, to introduce all our three speakers.
Thank you, Deepak bhai. Friends, we are very fortunate to have such an experienced panel and a moderator for today's session. The first panelist of the day is C. Anil Sathe. He is the founder partner at Bombay and Sathe Chartered Accountants. He has been the past president of Bombay Chartered Accountants Society and has also been the former editor of the Bombay Chartered Accountants Journal, which is known as the BCAS. The second panelist of the day is Mr. Noshir Dadrawala. He is the Chief Executive Officer of the Center for Advancement of Philanthropy. Since last 40 years, he has been providing compliance-related advisory services to a diverse range of NPOs in India. He's an author for various research papers and is an active blogger. He's also the trustee of quite a few well-known trusts and a member of the audit committee of Akshay Patra Foundation. The moderator of the session is CA Gautam Nayak, partner of the firm C&K & Associates, formerly known as Contractor Nayak and Krishnadwala. He has also been the past president of Bombay Chartered Accountants Society and the former editor of the prestigious BCAS Journal. With this brief introduction of all the panelists and the moderator, I would request to hand over the proceedings to the moderator so we can start the session. Thank you so much.
Thank you, Rajan bhai, Deepak and Vishesh. The thought for this particular program came from the fact that over the last 6 to 8 months, we've seen trusts being bombarded with all sorts of things. We've had amendments to the Maharashtra Public Trust Act. We've had the whole process of re-registration, which went on under the Income Tax Act for most trusts, which had completed the period of 5 years. Then we've had certain developments happening in FCRA. Something or the other always keeps happening there, and there have been certain developments happening in FCRA. And we, of course, have the new Income Tax Act 2025 coming in. And, while they have said that there will be no policy change for most of the provisions, insofar as charitable trusts are concerned, there are a couple of changes which could have significant impact on many trusts. And that's where we thought, this thought process was conceived that why not we have a sort of panel discussion on some of these crucial issues which we've seen, which have been the problematic areas, and, where some of the matters have been in the High Court, some are, as Rajan mentioned. So, and, having thought of this, I thought, Anil and Noshir, both of them immediately agreed to join this panel discussion. I think, thank you, Anil and Noshir. It's a pleasure to have you both, to discuss these complex issues. As you know, today, the subject of charitable trust, as it is, had been a complex subject. The taxation, their regulations, etc. But I think we're seeing now more and more a new level of complexity being introduced, and that's something which is, and very often, some of this complexity is caused by, let me put it this way, that certain approaches being taken by certain officers in the department at times, sometimes the department as a whole, that's where. And this was, I think, this time when your 12A registration, almost, I think a large number of trusts had to apply for the renewal of the 12A and 80G registration recently by 31st March 26. So September 25, they had to make the application. And the registration was to be granted by 31st March 26. And there was a whole, there were a lot of queries being raised. There were a lot of certain cases vouchers being asked for, etc. All sorts of queries. And one of the biggest problems that we faced, I think, was on this clause saying that does your trust deed have an irrevocable clause, and does it have a dissolution clause? And so far as this was concerned, one was a little wary as to what would be the stand of the department on this irrevocability clause and dissolution clause, because the understanding was in law really that is not required. That is automatically the other laws take care of that. That was the impression that one had. But we saw sometime in end January, early February, some rejections started coming in, and that set the alarm bells ringing. And the Bombay Chartered Accountants Society and the Chamber of Income Tax Consultants, we did a representation was made from BCAS to, as well as IMC, I think, to the CBDT and the Finance Ministry Principal Chief Commissioner exemption on this. But unfortunately, then we saw rejections coming in spite of this. And that's where then the realization came that there is no choice but to go to courts in this matter. And that's where, a writ petition was filed by the Chamber of Tax Consultants and Bombay Chartered Accountants Society, along with 6 other trusts, where they challenged these rejections, saying that, where the Commissioner of Income Tax Exemption was insisting that unless you had a clause saying that the trust was irrevocable, or you had a dissolution clause, they're saying that, no, I'm going to reject your application for registration. Now, that was the stand which the department had taken, and which one felt was not really legally justified. And that's where this had to be, there was no choice but to go to the High Court in writ in this case. And there, fortunately, I think the Bombay High Court was quite receptive, and, they did look at this whole thing, and they said that quite a few things. If I'll just, in short, I will just maybe, what the Bombay High Court said was that the legislature, in its wisdom, made the grant of exemption under Section 11 subjects to Section 61 and 63. So 61 and 63, as you know, are the clubbing provisions when case of an revocable transfer. So they said that it's only that, but it do not provide for any such provision in Section 12AB. And the statute does not enact, the High Court said, statute does not enact that mere absence of a revocable clause makes a trust revocable. Silence in the deed implies irrevocability and not revocability. So that was what Bombay High Court said. Then they looked at the provisions of the Maharashtra Public Trust Act, because this was only in Bombay that Maharashtra, we have seen, not even Maharashtra, I would say, affected by this. So, the Bombay High Court examined the Maharashtra Public Trust Act, and they said that it's a fundamental principle of public trust law that once property is dedicated to a public charitable purpose, the dedication is complete and the settler is divested of the property, assets can never revert to the settler. See, the fear of the department is saying that how do we know that if tomorrow you dissolve the trust, that the assets will be given to the settler or the trustees? Now, there the Bombay High Court said, as under the Maharashtra Public Trust Act or even under general trust law, the property can never revert to the settler. And there they said that even under section 22(3)(a)(d), they said that trust being revocable is expressly revoked. Means that the trustee should have an express clause enabling the settler to invoke and revoke the trust. Then they went on to other provisions that, for striking off of a trust, for winding up of a trust, where 22(3)(a) and 3(b), they said it's clear that assets of a trust which is registered under the Maharashtra Public Trust Act can never come back to the settler. It has to go to the Public Trust Administration Fund, which is managed by the Charity Commissioner. So it is the Charity Commissioner who will order that, and it can never go back to the trustees. That was, and then they said that the Commissioner exemption has completely misapplied the legal position. He has not understood the provisions of the Act and the Maharashtra Public Trust Act in their correct perspective. His apprehensions are clearly unfounded. And they very clearly said there cannot be a presumption that in the absence of an irrevocability clause, a trust is revocable, and there is the possibility that the assets settled by the settler would revert back to him. On the contrary, unless there is any revocability clause, the trust is irrevocable. And even in case of a revocable trust registered under the Maharashtra Public Trust Act, even if you have that revocable clause, the assets will never go back to the settler because of the Maharashtra Public Trust Act. That was what Bombay High Court said. They also looked at the Indian Trust Act and they said that a trust created otherwise than by way of a will can be revoked only with the consent of all the beneficiaries who are competent to contract, or if there is a power of revocation expressly reserved to the author of the trust. And therefore, in the public charitable trust, you can never get the consent of all the beneficiaries since it's the public who's the beneficiary. And therefore, it's not possible. And then they, of course, referred to, the audit report and the Ministry of Finance reply to that and the Public Accounts Committee, their discussion, etc. And where the Ministry of Finance has also said that you don't need such a dissolution clause or a revocability clause. It's not possible for the assets to go back to the settler. And then, of course, one interesting aspect which the High Court brought about is there's a distinction between a revocable trust and a revocable transfer. So you may create a trust and you may have a clause saying that the trust is irrevocable. But thereafter, a donor could give a donation with a condition that if those conditions are not fulfilled, the donation will revert back to the donor. Now that is a revocable transfer. Though the trust is an irrevocable trust, the transfer could be revocable, is what the Bombay High Court pointed out that distinction. And then they said that in the past, the department has never asked for this. So a completely new condition cannot be, invoked to, put at not the entire provision dealing with grant of exemption to charitable trust. And there they've said that the Ministry of Finance has categorically rejected, that in the absence of specific provision of revocable dissolution clause, application cannot be rejected. They also referred to an earlier Bombay High Court decision on this. And then there was the Bombay High Court in the decision, what they said is that the commissioner shall refrain from rejecting applications for registration or renewal under 12AB solely on the ground of the absence of an explicit irrevocability and non-dissolution clause. The department shall not treat the answer yes in the form of application. You have to say whether you have an irrevocable clause. And if you said no, you could not fill in the form itself. And they said that that cannot be constituted specified violation. It cannot be a ground for rejection just because you said yes, though you don't have a specific clause saying that you are irrevocable. They said directed that the department shall amend the utility of Form 10A, 10B to AB to allow applicants to correctly state the position regarding the irrevocability clause without being forced to make an incorrect declaration. And that question should be modified to read, is the trust or institution revocable? That's the way that the Bombay High Court said. And for those 6 trusts which had joined the Chamber of Tax Consultants and the Bombay Chartered Accountants Society, those 6 trusts, they quashed the orders and set aside those rejection orders. Not only that, they said all such orders where the commissioner has rejected registration, all such trusts where he has rejected solely on this ground, those orders are also quashed and set aside. And all the consequential orders under 80G also, which have been rejected because the 12A has been rejected. So those were also being quashed and set aside. And the commissioner exemption was given a time period of 6 weeks from that date to pass a fresh order, to give effect to the grant registration based on the Bombay High Court decision. And that orders which he would pass, obviously because it would be 20th or 21st April was the due date for that, but it would be effective from 1st of April. That was the. So now coming to the consequences of this decision, Anil, maybe if you can this thing. So one of the things is, of course, the department in some of the orders, what have they saying? How did the department pass those orders? There have been some conditions that they've laid down, etc. If you can maybe elaborate on that. Anil, you're on mute. Anil.
So as a consequence of the Bombay High Court ruling, I could quickly split the orders passed by the Commissioner of Income Tax Exemptions into three parts. One, which were passed prior to the Bombay High Court order. There, in some cases, he has denied registration on the ground or cancelled registration in some cases also, where the original registration were provisional, saying that the registration on account of the fact that the trust is, there is no irrevocability clause, the registration is not granted. The second part of the orders were post Bombay High Court, he decided that, look, yes, because he had to follow the Bombay High Court in whose jurisdiction he fell, he granted registration with the caveat that the department is proposing to file a special leave petition to the Supreme Court, and because it is proposing to file a special leave petition, the registration will be subject to the outcome of the SLP. The third class were, of course, rejections were on account of the fact that he claimed that the data was not responded, etc., etc. I'm saying he claimed because the orders are couched in such vague language that it really one does not really know as to what the exact position is. So these are the three broad classes in which these orders could be classified. Now, what has happened thereafter? Thereafter, what has happened is that the matters were agitated in respect of rejections which were prior to the Bombay High Court. Obviously, the recourse to the trustees was to file an application or an appeal to the tribunal. Most have done that. In regard to the orders where initially there was a rejection and which have now been granted registration subject to SLP, it was advised that it would be advisable to approach the tribunal for the reason that should the SLP be filed and actually admitted, the technical difficulty, I'll just take a minute on that, is that while the Bombay Chartered Accountants Society and the Chamber were parties to that petition, the trusts which were not parties to that particular petition were also granted relief. Now the question therefore would be that for this limited aspect where these trusts were not petitioners, whether the Supreme Court could take a view to say that the writ petition filed was treated as a public interest litigation, which may not necessarily be the technically correct proposition. Though, of course, in para 3 of the petition, rather the order, they have covered that aspect, but nonetheless. So many trusts we have advised to file that, and fortunately, those appeals have started coming up. In fact, one appeal has already come up, and the tribunal was gracious enough to say that the caveat that the registration is subject to the special leave petition is well beyond the powers of the commissioner exemptions, and the tribunal has already ruled in this regard, saying that that particular part of the caveat or the conditionality is quashed. So we already have, in the case of Ila Rajesh Foundation, those who want to make a note, it is ITA numbers 4488 to 4491. The order has just been pronounced on 15 May 2026. So this is where we have traveled. As far as the SLP is concerned, the SLP, we do not know whether it's been filed or not. We believe that there is some degree of action on that card. Now, the last part of this
Sorry,
particular
Anil,
issue.
on the SLP, I was just checked, today also on the Supreme Court website, and nothing has
It
happened.
is not
so
there.
far.
It is not
It's
there.
not
It is
yet been
not there.
filed. It's not yet
Yes,
been filed.
but sorry to say this, but with the dispensation being headed by the current ASG, I really do not know whether they would be adventurous enough to file this, because I guess that if it comes up before a proper Supreme Court bench, then possibly there would be a degree of castigation. But nonetheless, this is as far as the litigation is concerned. Would we advise people to still approach the charity commissioner for the amendment in trusts? Because trusts would be categorized into public trusts, companies where the question of irrevocability really does not arise, or societies under the Societies Registration Act, and other trusts. Well, it is a double-edged sword. Some people feel that suppose this litigation carries further, because one of the grounds which the affidavit in rejoinder or response was taken by the department is that the IT Act 2025 now has a condition of irrevocability, which is wrong. Yes, 332 does explicitly say this, but it does not say that you have to have an irrevocability clause. And the Bombay High Court very elaborately has already set out the legal proposition that trust ordinarily would be irrevocable only if there is a specific revocation clause, in which case normally the Maharashtra and Gujarat Trust would not get registration under the MPBT Act. So therefore, this proposition has been explained. Yet some trusts have been, cautious enough, and they have applied to the.
Sorry, Anil, if I may interrupt here.
Yes,
Sorry,
yes.
in the Bombay High Court has expressly, in fact, this was an argument taken up before the Bombay High
Right,
Court
right.
about the new act, and the Bombay High Court has specifically said that it is not found that the conditions of Section 332 would not be fulfilled on account of mere absence of an irrevocability clause.
Very
Therefore,
true.
even under this High Court decision would still apply even under the new act.
Absolutely, absolutely. But nonetheless, some trustees could be cagey and saying that. So what we have suggested that ideally nothing needs to be done. The legal proposition is crystal clear. But if at all people are going to lose sleep over it, then maybe you could say that while the trust has always, since inception or incorporation or registration, been irrevocable, as a matter of abundant caution, you are reiterating the position. There, your amendment and so-called amendment should stop. That is what we have suggested to a few people, because many of these trusts are manned by people who are very, very senior. They do lose sleep over these situations. So therefore, as a matter of abundant caution, as we call it, we have advised that. This is the position as far as irrevocability is considered today.
Yeah, sorry, Noshir, if I may ask you to comment on this. If I were to, want to amend the trust deed and put this clause, then what is the procedure under the Maharashtra Public Trust Act? Do I have to go under 50A, or how do I do it?
Thank you for posing that question. For amendment C, for trusts which are outside the 4 states where there is a charity commissioner, Maharashtra, Gujarat, Rajasthan, and Madhya Pradesh are the only 4 states which have a public trust act in force and an office of a charity commissioner. Even Delhi doesn't have it. Now, if you are in a place like Karnataka, Bangalore, etc., you may possibly, an easy way out is to do a deed of amendment, where you simply it's a supplementary deed or a deed of amendment where you want to reiterate this point, and that's easy because you simply go to the sub-registrar's office. Now, for any amendment here in Maharashtra, you only invoke a scheme of management, which is there under 50A, because there is, for any amendments to be made, there is no specific provision under the Maharashtra Public Trust Act or the Gujarat Trust Act. So for everything from whether you want to change your objects, whether you want to change the name of your organization, to adding this clause, Charity Commissioner invokes Section 58, then you go for scheme of management under which I will change whatever you want, but the process is long, laborious, and it takes several months for the Charity Commissioner to process it. We all know how the department works here in Maharashtra.
In fact, Noshir, I was with the High Court when this matter was being argued, and Justice Kunawala, when the departmental representative said, "Oh, so all the trusts have to do is amend the trust deed." So he said, "Do you know how difficult it is to amend a trust deed? What are you talking
Absolutely. Absolutely. Sir, simple change reports are not getting approved in time. What are we talking about? 50A applications, they take forever. Let me also bring up one more point which has not been covered about this dissolution. Please understand that the Societies Registration Act of 1860 has a specific clause for dissolving a society and how it can be dissolved. Under the Indian Companies Act, also, if you are on license under Section 8, there is a dissolution clause. The Trust Act itself, whether it's the Maharashtra Public Trust Act or for that matter, the Indian Trust Act, which is essentially for private trust, doesn't have any clause for winding up a trust. I remember going to the Charity Commissioner's office before the 2017 amendment, where this deregistration process has been brought out. He was saying, I have no authority to dissolve this trust because it was a very old trust with some trustees in the realm of 70, 80 years old with 2-3 lakhs left. He said, you go to the High Court to get this dissolution order. And they said, we got only 2-3 lakhs. I mean, it will cost us much more money to get this dissolution order. So, I mean, right now, what is there for this? I mean, you can't even dissolve a trust. There's no provision under the Act.
No, Noshir, just one thing, I mean, looking at the general proposition, I mean, principles of law, that what is a trust? It's an obligation attached to property.
Legal
So if there's no property, there's no trust.
It's not a body corporate.
I'm saying in a trust. No, in a trust where there's no asset which is held subject to an obligation, then there's no trust in existence. Is the way I look at it, frankly speaking, in general law.
In trust, there are 3 things essential. There has to be a settler, and there has to be a property. And usually nowadays, people settle it with 500 rupees and 1,000 rupees. That is the property of the trust. And there are trustees. The settler may or may not be a trustee. The settler's job is to settle the trust and move out. Sometimes the settler says, I will be a trustee. And once that is done, it obviously is dedicated to charity, to public purpose. Where is the question of revocability? This revocability, etc. issues arise under the Indian Trust Act, which is applicable to private trusts, where there are private beneficiaries involved. And the settler may want to change his mind about that. In the public charitable trust, this is absurd. I mean, and remember in 2021, there was, is revocability clause there? Yes, no, or not applicable. And people use not applicable. It is under this 2025, the form that didn't allow the NAP clause that was there. So it has been deliberately done, I would think.
Okay. So, leaving aside irrevocability now, the next, there have been 2 or 3 other issues also on which one of the grounds, and where we're seeing quite a few trusts there, and large trusts, we're seeing that there have been rejections on the ground that the activity is not genuine, saying that you are earning a large surplus, therefore this amounts to a business. And because this amounts to a business, this is not a charitable activity and therefore it is not genuine. Now, in effect, what they have applied is that the proviso to 215 has been brought in. And again, this has been brought in for educational institutions, it has been brought in for medical institutions, it has been brought in for religious institutions. So, Anil, what are your thoughts on this?
As I said, we have been in practice for more than 40 years now. And increasingly, we are finding that the charitable trusts are being, shall we say, treated quite unfairly. On this aspect of business, this is a, shall we say, I call it often in my office the ORDA fever. First of all, ORDA itself dealt only with the proviso to 215, and the law is crystal clear that to the first 4 or 5 or 6 limbs, the main charity as we may call it, the proviso does not apply. Now, the question of whether a large surplus by itself would indicate carrying on a business, to my mind, well settled. I don't need to go into plethora of rulings on this, that merely a surplus arising to a charitable trust does not result in the inference that it is a business. And also, let me point out that as far as business activity or what they call in Income Tax Act 2025 commercial activities concerned, the law itself treats both these propositions separately. If you see section 345, it talks of a commercial activity which is incidental to the objectives of the trust. Now, this is a phraseology which is different from the GPU category, where GPU means advancement for general public utility. That category uses the words that, yes, the fulcrum condition is that it has to be in the course of carrying out that activity. Now, these two are different things, and rightly so. If you ask me, the main charitable trusts are treated on a different footing because the law accepts that inherently these activities are charitable only if there are incidental activities which do not fall within the realm of that. Something may not fall within the realm of education. For example, a school may run a bus service. Now, that's an activity which is incidental to education. Now, the question is that in this scenario, would merely a surplus? The answer is clearly no. What I believe is that even in calculating this surplus sort of situation, where possibly the order decision is read wrongly, is that the popular example given is the coffee table published by the Gandhi Peace Foundation. I would consider, even in that scenario, whether the question is whether a large markup itself leads us to a inference that it is a business. I would take a view that you have to consider the activity holistically. Now, where publishing of books in order to propagate my philosophy is an activity, it's an activity clearly incidental to my objectives. Now, in that situation, can you say that on a particular publication I earn a large surplus? I would not think so. Where you have a surplus over some streams out of that overall activity, others are not earning that surplus, I do not think that it should be categorized as business. And one specific point I wish to make is that ultimately the object of commerciality or business is that somebody takes away the moolah at some point of time for a personal benefit. In the hands of a trust, unless there is cause to see that section 13 under the erstwhile act is attracted, I don't see merely earning a surplus. People earn surpluses which may not necessarily be arising on account of a markup. For example, an institution like the BCA may hold a seminar. Now, once he has held a seminar, it is on the basis of a particular estimate of people coming. So therefore, I do not think that these surpluses thing really matter. Of course, it is true that over a period of time, there have been people like who are sidestepping the law. But they are capable of being taken care of by the law as it stands. Just making, an inference that just because you are earning surplus, you are carrying on business is not correct. Though, of course, at this stage, I must caution people that in both cases, separate books of account, even under the new law as well as the 61 Act, maintenance of separate books of account is important. And I would draw people's attention because many people come to us and say that, all right, I have a ledger account from which the income can be determined. We have a decision of the Bombay High Court, which has come to a conclusion that where the law uses separate books of account, those books of account must be distinct from your normal activity. So that caveat I want to just bring to the participants' notice here. Gautam is well aware of.
Yeah. So, Anil, but I think the main point is, carrying on of a activity which is, say, genuinely, I mean, I would be actually carrying on a business activity. Let me put it this way. There may be some activity which is a business activity. Say, for instance, I mean, this one case of a religious trust which is running a restaurant where they distribute prasad, as they call it. So, now, would you say that, just because one activity that it determines the genuineness of all your activities, or do you have to look at it holistically? Now, that's the real question.
No,
Can you say
in
that
fact,
on the basis of this one activity, you're not genuine?
in fact, I would say, Gautam, that merely earning money, does it render an activity non-genuine?
Exactly.
The activity
Exactly.
itself is carried on absolutely genuinely with accordance with the norms set out by trustees. A surplus or an activity, mere activity earning a revenue does not make it ingenuine. It's ultimately what is ingenuine? Ingenuine is that you camouflage the ulterior objective of making money and transporting that money to somebody else. That would possibly make your activity ingenuine. The word genuine in all his colors in the English language has been grossly misused by the dispensation, and I'm often saddened by the proposition. And when we come to out of India, because that is also one more, shall we say, hiccup that we are facing. I would believe that courts have not read the various, aspects of this particular thing. But in business, I'm clear that merely earning good money does not make an activity ingenuine. As long as you are within the parameters of your objectives, I think the exemption cannot be denied. Unfortunately, for GPU trust, they have kept a further fulcrum of 20%. But that also, law is now crystal clear that assuming that test results in your exemption being denied in a particular year, qua registration, that cannot be a parameter. That law also is now well settled.
Yes, you have section 13(8) itself, which specifically says
absolutely.
it's only you lose your exemption for the year. That's the clear position. But, Anil, and, we're seeing this happening in spite of various High Court decisions also. For instance, you have your Bombay Hospital Foundation, Bombay High Court very clearly saying the medical shop run by a hospital, though, you may make a surplus for the medical shop and it's a business perhaps, but still it's incidental and therefore should not really impact your exemption. I think that is very clear.
Unfortunately, Gautam, what is happening is that what needs to be, in fact, I said that at a particular seminar, that what needs to be addressed is because we have, people saying that appellate decisions should form early. What needs to be addressed is possibly the mindset and the understanding.
Absolutely.
So, I believe that if the dispensation believes that charitable trusts have a place in the overall economic ethos, then they must be treated fairly. And I'll just mention a minute on that. What is happening today, like this particular clause where you have to tick. Yes, undoubtedly you want efficiency, and therefore you, on the basis of algorithms, you have your forms being processed, etc. But institutions like charitable trusts need a fair treatment, and that possibly can arise only with an element of discretion, human discretion. Unfortunately, on both counts, we have mechanical, treatment, and the treatment does not seem to be at least palpably fair. So that is where we are at the moment. Right.
So, so this on this genuineness of activities is one part, but the other thing is also genuineness of activities. Some cases we have seen where, as you know, they've issued these notices to more than a lakh of trusts in Mumbai alone, and they've been standard questionnaires which have been sent and other thing. Now, in some cases, they have we found that they've been asking for vouchers. Please find stuff. Now, I don't know whether the commissioner should even get into asking for vouchers, and is the commissioner's job that of an assessing officer? I mean, that's the assessing officer's job to look at vouchers, if at all. I mean, it's more the inspector's job rather, but unfortunately, and in some cases we found that they have rejected on the ground that vouchers are not produced. But and saying that the activity are not genuine because vouchers are not produced. And in the worst part is, in some of those cases, there were no vouchers asked for also. The notices did not ask for vouchers, and still they were rejected on the ground that vouchers are not. Now, I think that is, what is your thought on that?
No, I entirely, one is aghast at the way it is happening. Inasmuch as I believe that when you test genuineness, any reasonable officer would be able to ascertain whether the trust activity as reflected is something which shocks the conscience. Now, if you come to that degree, then of course I don't, there would be some black sheep. they don't deserve registration, but others, ultimately, the 12A registration is merely the threshold of, exemption. Every year, an entity claims under 11 and now under the Income Tax Act under different sections. So the acts have enough teeth to examine as to whether the activity is genuine or otherwise. At the test of genuineness qua 12A, what you have to really see is whether there is something which is palpably wrong, and that I think can easily be ascertained on the basis of documents which come to the fore. This is merely, as some decisions say, this is the first gate that you are crossing. Section 11 has got enough powers. You have 13 and you have IT Act 2025 also. That's an annual test. This is a test of 5 to 10 years. So I think you have to look at it totally differently. And you have, in fact, when we argue this, these bogus purchases and bogus capital gain cases, they say that documentation is perfect and that is not the only test of genuineness. Now, look at it in this perspective. I may have the best printed vouchers. Does that make that activity genuine? It's so that's how it is.
Correct. No, and in fact, unfortunately, one of the things which we've seen is that very often the officers processing it or the commissioner's office, they're not really aware and up to date. I think Noshir, you were mentioning some recent this thing of rejections of Section 8 companies. If you can just maybe throw some light on what's happening.
I mean, so I remember one or two instances where they said that, by the way, let's have an understanding of what is a Section 8 company. There is no such thing as a Section 8 company. It is actually a company either incorporated as a private company or a public company with share capital or limited by guarantee. And Section 8 is a license. Under the old 56 Act, it was Section 25. So it's a license. Now, old organizations prior to the 2013 law used to have a separate incorporation certificate and a license. And the ITOs used to say, where is the copy of your incorporation certificate and license? Now, the latest procedure is, which has been made seamless, is that one certificate combines your incorporation and your license. And yet, for that, there was a lot of unnecessary havoc that was created and a lot of explaining had to be done. That now the system of separate license and incorporation does not exist. It's one certification that you get through a seamless process online. So, yeah.
Yeah, I think now all these rejections, which have happened, I think will keep the tribunal at least busy for the next few months. We'll see a spate of orders coming in where hopefully some sort of clarity also will be brought into the law by the tribunal. I think that's So, leaving aside now the Income Tax Act 61, and let's move on to FCRA. Now, FCRA, something or the other is always happening. We're seeing some attempt or other. And, in December last year, we've seen notices being received by trust saying that, why should your registration not be cancelled because you're not been spending for FCRA funds over the last 3 years or 2 or 3 years for 2 consecutive years, and again, probably the reference there is to Section 14(1)(e) of FCRA, where if you've not been engaged in any reasonable activity in your chosen field for the benefit of society for 2 consecutive years, or you become defunct. So now what has happened is in the last couple of months, we've seen quite a few cancellations which have come in, though those entities are carrying on activities, but because they don't have FCRA funds or they've not received FCRA funds over the last 2 or 3 years, so there's been no FCRA spending, or sometimes they have some small amount of FCRA funds which they've not spent at all, but they've been carrying on regular, genuine activity, where with now that has been one of the things which has been happening, and very often in these cases also what happens is you may have FCRA investments, in which case obviously you have FCRA income which you may have spent, which is not a problem. But if you received FCRA income or you've not shown that as FCRA income, then perhaps your FCRA returns don't reflect any income and expenditure. So Noshir, what has because many of these, I think they have FCRA assets. Those assets are being used for their activities. Say, for instance, a hospital. Now, hospital, they've invested in equipment. Those equipment are being used, but they've been relying on domestic funds for the operations over the last 2 or 3 years. What is your thought process on this, Noshir, this
The thought
cancellation
process
thing which
is
has happened?
clear. I mean, if you have, there may be capital expenditure that you incurred, or there may be revenue base. I mean, so if it is capital you invested in, let's say, as a hospital, a CT scan machine, etc. It's, I mean, obviously CT scan machines, etc., cost an arm and a leg, and they are in use. So you cannot say now the activity is not there. That money is already capitalized. Or you may have set up a school, or you may have set up a training center. There might be fees that you are charging from that, and that again has to be accounted for under FCRA. These are all activities, but let's consider that it is smaller organizations. And as long as they are carrying out, and the language of the law is activities in its chosen field. The chosen field may be education, whatever else. I mean, as long as that is happening, simply having, let us say, a corpus. Now, there has been an argument also by somebody in Delhi that the concept of corpus may be understood in terms of Income Tax Act and the Maharashtra Public Trust Act, but FCRA has no concept of corpus. You are receiving money for carrying out activities. So they have even questioned the idea of having an FCRA corpus, because they say corpus is not defined anywhere under the FCRA, and this is a live kind of a situation that I'm referring to over here. So all these kinds of complications are unnecessarily being created in terms of act. I think another thing is that earlier people were spending FCRA money because they were able to use 50% of their FCRA contribution received on salaries. Now the admin expenditure has been reduced to 20%. Now that has also affected. You must understand that there have also been changes in the law that have made organizations become very restrictive in using their FCRA money. So you can, I mean, an organization I genuinely know has money, but it's saying, oh, but we are restricted by this 20% clause. And I'm not referring here now to large institutions and hospitals. I'm talking of mid-sized organizations who are feeling this constraint now. So you amend the law such that you cripple people and then you punish them for not using the money. I think this is unfair. And throughout his talk, Anil Sathe has been talking about fairness. I think where is fairness? Foreign contribution regulation, I believe, should be changed to Foreign Contribution Control Act. I mean, it's all about controlling. Do this, do that. If you don't do this, we'll take away your assets. It's beyond reasonableness.
Yeah. So talking about the amendments, Noshir, we had that FCRA Amendment Bill 2026, which was introduced on 25th March, where you have a new Chapter 3A proposed on vesting of foreign contribution and assets in a designated authority. You have Section 16A to 16L, where foreign currency and assets created out of foreign contribution on cancellation of your certificate or on surrender of your certificate or cessation of the certificate, they will vest provisionally in the designated authority from the date of such cancellation. And assets shall vest wholly in the designation authority, whether created or acquired partly from foreign contribution, partly from other sources. And if a fresh certificate is granted or renewed or restored within the prescribed period, then the foreign contribution will be unutilized foreign contribution and assets which are vested provisionally will return. If not, they will permanently vest in a designated authority, and designated authority shall apply foreign contribution assets permanently vested for public purposes and may transfer them to any ministry, department, authority, or agency of the central state government or local authority, or dispose of such assets through sale or any other appropriate process and credit proceeds to Consolidated Fund of India. So is this now an indirect confiscation of the FCRA assets, a nationalization?
This is why I said that the law should be amended to be called the Foreign Contribution Control Act. If this is not control, what is? Where is regulatory? See, you must understand that laws of this country must regulate. There is nothing wrong with regulating. You have to regulate. But this is the control bit which is bothering me. And I'm speaking with some trepidation. I don't mean to be critical of the government over here. All I'm saying is that let us say an organization has created a school, let us say partly with, or maybe the land belong to them already. That is, this is non-FC. That is from day one they had it. And now they got some foreign contributions to build a school. And supposing there for some unfortunate reason their FCRA is cancelled, or they even decide to voluntarily surrender their FCRA, or for whatever reason something happens, this school building can be taken away. What happens to the land? Or there might be the school which is built partly with foreign money, partly with local. They say you have to make an application that whatever, and that again the government has to decide on what part can be returned to you. How can you return a building that you have created partly with what portion and what proportion and what ratio are you going to use it? It defies the mind and it defies all logic, in my opinion.
No, and not only that, take a situation where you have a building constructed on domestic funds, you use the foreign funds for renovation of that building. Now, what happens there? I mean, that's another thing. Or a situation where you have an MRI scanner, you've acquired it for 5 crore, but 10 lakhs is FCRA funds you utilize for that. Does it mean that the entire MRI scanner goes to the government? I mean,
Cannot. So this is where I'm saying that it is legally usurping things which have been dedicated for charity. I mean, sorry, I don't really mean to be so critical as I'm appearing, but I mean, this is unfair.
But
There is reasonableness and unfairness.
No, I think there was a lot of opposition to this, and that this has been referred to a committee, I understand.
But I would like to mention this that right now this havoc was created in 2026, but the amendment actually happened way back in 2020. Please understand that when the 2020 amendment happened, it talked about a competent authority in which assets can be in movable assets or immovable. So even if you have some remaining balances in your savings account in FCRA or utilization account or your designated account, or there may be a corpus fund that you might have, all this will vest in a competent authority. That is what was said in 2020, 5 years ago. It is only now that they are naming the designated authority and everybody is up in arms.
Yeah, you had your existing section 15, which is now being replaced by the whole chapter.
Noshir, now from hearing you, I believe both in tax and both in FCRA, what really is causing this is the trust deficit. Is the sense that there is a trust deficit between the dispensation. If there is going to be belief that there is something wrong, and that is going to be the presumption, and you are going to try to satisfy that presumption, then of course everybody will face difficulty. The presumption should be to the contrary. So can you therefore, it's like saying that are you then comparing FCRA with benign prohibition, UAPA and things of that where you have confiscatory powers? So
Go on. Sorry. Please understand that it is the nature of the law. See, if you are in business, FEMA applies to you, which is the Ministry of Finance. If you are into charity work and foreign contributions are being received, it is Ministry of Home Affairs Internal Security Wing. For all practical purpose, and pardon my saying this, you are a potential terrorist organization. Literally. And there are sworn affidavits in the High Court by the Ministry of Home Affairs about, foreign money coming into Northeast for certain purposes and coming into South India for certain purposes and things like that. I'm not elaborating all that. This is all to public knowledge. I'm not revealing some kind of a state secret. This is all to public knowledge. So there is genuinely a prejudice that foreign contribution comes into this India against national interest, which is not true. This is the fundamental untruth.
One thing, because we are ultimately panelists on what I would suggest is that the era where in the sense the dispensation believed the claimants of an exemption are gone. So you have now trustees must essentially appreciate and understand that compliance is the buzzword now. So it's no longer the fact that, all right, you will always get away by saying that my application is delayed, I do not have the machinery and things of that sort. It's some sort of a dilemma, because what happens is that then you will have to engage better professionals, better knowledge. But now in the coming era, that seems to be sine qua non. So therefore, according to me, my advice to everyone would be that be very, very sure when you are incorporating a new trust. In regard to trusts which are already existing, live with the proposition that yes, you have got to comply. You have to comply with laws which to the lawmakers may not be complex, but to us are going to be complex. So therefore, I think this is something which I'd advise to
I agree, Anil bhai, but I would also like to give an advice that FCRA has put the burden and onus also on chartered accountant fraternity, because you have to certify these things and falsely certifying, and it may not be intended. But if the ministry takes the view that you have falsely certified it, as a professional, you are also in jeopardy.
Then
So
you will,
many CAs are not wanting to do FCRA.
no,
They say we'll do your
then
regular but not FCRA.
you deal with FCRA, your shirt will be transferred to a checkered shirt very shortly. So that is what is likely to happen. No,
No, Anil,
people feel,
you
but then this
mentioned
is what
about,
it is.
yeah, you mentioned
Yes,
about
yeah.
business. I remember, almost 30, 35 years back, I had an NRI client who would come back to India and he set up a trust and those days trust was very simple as compared to what it is today. And he used to say at that time, he used to say that running a trust in India is more difficult than running a business in Hong Kong. That was his, and today I think it is far,
It
far
is
worse,
so
I
true.
think.
It is so true, but it is so true.
Absolutely.
Layers
It's
and
much,
layers
much
of
worse.
compliance, layers, and I mean, you spend
Absolutely.
more time on compliance than your actual activities. And I'm talking of the mid-size
And
and the
that is
smaller
the sad
organizations.
part of it. Absolutely.
Yes, you
Hmm.
spend more
Absolutely.
time on this and worrying about it. Many
Correct.
people don't want to join the board.
But as a professional organization, I think we need to tell people that this is what it is, and therefore you have to live with now compliance. So therefore, that's something,
Yeah, it's a complete change of this that you
yeah.
have.
Since we
Yeah.
are on
So,
FCRA, if you, you want to take the
yeah, sorry, on FCR, Anil, you had something? Yeah.
No, I only said that over a period of time, filing of accounts, all this has become more and more difficult. And as Noshir rightly
Yeah,
said, your admin expenses limits have been slashed. So quite a few things, are
while your
changing.
admin work is being increased.
And the
That's
allowability is
yeah,
getting reduced.
absolutely.
Yes, yes.
No, and
So I was
Noshir,
one.
what is the position of this committee? Which committee have they referred it to? Any this thing on that? This bill, I think they've been for consultations. They've deferred
Yeah,
it,
but
is what I understand.
I'm not very sure
So
about which
whether they've
committee this is, but
or
yes, it has been referred to. So it's only on the back burner. I mean, the threat,
right.
the sort of is still on your head. I mean,
Hanging
it's
sword is
not
still
gone.
there.
Because
Correct.
remember, the act is already amended. It's only question now of implementation. See, two things were happening.
No, the
Organizations
bill has not
were
been passed. Noshir, the bill has not been
No,
passed.
26 bill has
that is
not
what
been
I'm
passed.
saying. The bill is still a bill, is not an act, but a 2020 amendment is passed.
Correct.
Which is, and so what was happening is there are two scenarios. You didn't have any immovable assets. For them, only their bank account stood frozen. But
Correct.
those who had immovable assets, they merrily continued. For example, schools were created, hospitals, etc. Now, this amendment will give them powers to take over your
Take the
other
correct.
thing. And this is where the real concern. That is why people were quiet from 2020. But now, because this has happened, now there is complete panic button.
Right.
Yeah. Correct. Then let's come back to income tax and the Income Tax Act 2025. Anil, there was in the old Income Tax Act, we had this controversy as to whether the objects had to be in India or, because the language under Section 11(1)(a) said applied for charitable or religious purposes in India. So whether application had to be in India or the charitable or religious purposes had to be in India was the issue. And we had those conflicting decisions of the Delhi High Court and National Association of Software Service Companies and the Karnataka High Court in Ohio University Christ College, which had taken a view that, so the facts, of course, were quite...
Permit me around 5 minutes on this because I believe that with due respect, NASSCOM went on the proposition that you cannot do offense to a grammatical connotation. And they said application means application of what, where, etc., etc. As far as Ohio is concerned, Karnataka High Court, it approved the decision in gem and jewelry, etc., etc. Then you had the decision in 269 ITR, which was dealing with registration. And there they said that at registration stage, you don't look at, not necessarily look at 11(1)(c). And there have been a number of the last one, which you mentioned before this program began, was the Nizam decision. I went through literally going through the entire language, and I believe that, honestly, I believe that the courts have, misapplied themselves. According to me, there is no doubt in my mind that, and I'll just take a minute just to look at Income Tax Act 1961, the language, as well as 11(1)(a) and 11(1)(c). See, 11(1)(a) uses the words where income from property held under a trust wholly for charitable or religious purposes, to the extent to which such income is applied to such purposes in India. Now, we all believe that the purposes have to be Indian and the applications. Now, contradicting this with 11(1)(c). 11(1)(c) says, created on or after 1st April 52 for a charitable purpose which tends to promote international welfare in which India is interested, to the extent to which such income is applied to such purposes outside India. So here also, if I read it correctly, the law can be read differently by different people. But according here to me, there it is purposes in India. Here it is purposes outside India and not the
purposes as well as
application.
application outside India. Correct.
It does not refer to
11(1)(c).
application. And for this, I will just read out, because why I say that there is misapplication. If you I think the decision in NASCOM also, they quote the Supreme Court in 59 ITR 582.
Correct.
And look at what the Supreme Court is saying. Because we have a situation of 1422 Act, which was applicable to all territories, because at that time India was not free. 1452 there was an amendment, and now you have 1461. I'll just read very quickly a paragraph from that ruling which says, under the said clause, trust income, irrespective of the fact as to whether the said purposes were within or without taxable territories, was exempt from tax insofar as the said income was applied or finally set apart for the said purposes. Presumably, as the state did not like to forego the revenue in favor of charity outside India. So what is the emphasis? Emphasis is in favor of a charity outside India. The amended clause described with precision the class or kind of income that is exempt thereunder, so as to exclude therefrom income applied or accumulated for religious or charitable purposes without the taxable territories. So if the application is for religious or charitable purposes without the taxable territories, so charity outside India is what is frowned upon and not application. I think there is a presumption on the basis, because I strongly believe that ultimately in today's world, if I am to, on the one side, the dispensation says that we have to, we have to be global. Now, if that is the proposition, take the case of a hospital. I require an equipment which is not available in India for any reason. I'm bound to, buy that equipment from outside India. And if you see, I was questioning myself as to, in a situation where I place an order for that machinery from India, the obligation is incurred in India. If it is incurred in India, to my mind, the tests of 11(1)(a) are satisfied. It is only in scenarios, there may be, gray areas. I'm not saying no. But according to me, the predominant test has to be purposes in India and not application. Yes, the word application also in Gujarat's decision in 211 ITR has been tested and so on and so forth. They have distinguished between what is application and what is spending. So according to me, there seems no doubt in my mind that as long as the beneficiaries of the application are Indian, I don't see it failing the 11(1)(a) test at all. And that is how I would look at it. A similar proposition is there in the IT Act 2025. Of course, in India, litigation travels. So this ultimately, and Delhi is unfortunately a very exhaustive decision. Ohio and the other decisions seem to sort of suggest that yes, once the purposes are Indian, this would require probably much broader analysis. And I'll look at it this way, is that there would be cases where the beneficiaries are definitely Indian. But let's take a case that if I have to hold an Olympics for which I have to train people outside India, would you then say that for training the Indian contingent, if I incur expenditure outside India, I have to approach the CBDT every time?
Participate in the Olympics, Anil. To
But
participate in the Olympics.
everywhere, I
Simple.
think
Anil
Even to
bhai,
participate.
Anil bhai,
I
you
don't
allow
think that that's the
Olympics.
correct proposition of law at all. This needs to be presented first. There, as I said, there would be gray areas. There have been situations where you hold concerts outside India on the ground that you are popularizing Indian music. There could be some issue because ultimately, who are the beneficiaries of that music? Are they only Indian, or is there a part which is benefiting people outside India? And there I would quote with approval Royal Charities, which is I think 12 ITR. So if as an incident I hold a music concert of Indian musicians outside India, and the ears of the Westerners are happier, that itself should not mean that I am not allowed that expenditure. That is how I would look at it. There would be gray areas. I am not saying no. So where charity is outside, yes, there I have.
But I think one thing is very clear, Anil, that the situs of the activity is extremely important. That if your activity is in India, the mere fact that you're making a remittance from India should not get hit.
Exactly.
Unfortunately, what is happening is if you see your audit report in Form 10B or 10BB, and even in the new audit report, they're asking for details of remittances made outside India. Which is where I think sometimes one gets
the incurrence of the obligation is the first stage. The remittance is merely
the subsequent. Exactly. Payment is subsequent to the incurring of the obligation.
I really don't see. But yes, this is, and as you said, coming little back to registration, where there is a clause in your deed which permits such spending, that also is being
No, but Anil, the problem is now if you look at Section 332(2) of the new Act, which says that where you're eligible, for eligibility, one of the conditions is properties of such person are held for the benefit of the general public under irrevocable trust wholly for charitable religious purposes in India. So today, if I have an object of spending outside India or of an object outside India for the whole world, say for instance, for instance, a global warming, entire world, I want want to benefit. Then the question is, it's not wholly for religious charitable purposes in India. So does it mean I'm not eligible for registration? I think this seems to be really absurd. So, can you have one object which is for purpose outside India, or can you have, everything has to be only for India?
Then you'll have to rely on international welfare in which India is interested.
No, but you can't even go there, Anil. You can't go
I know,
to 338, you can't go to the CBDT, because unless it's in your trust deed, you cannot go to the CBDT. You can't do it.
Noshir wants
Yes,
to
Noshir.
There are also examples of trust which is wanting to give scholarships to students, or
Correct.
sometimes even aid for medical treatment, which is possibly very specialized outside India. Now, most of the trusts would like to make a direct payment to the hospital or
the school.
the institution.
Correct.
But now they are feeling compelled to give it to the individual beneficiary, holding the risk that once given, that person may or may not go over there. Please understand that these kinds of situations also arise, and therefore this is an unnecessary debate that is being created by the regulators.
No, if at all, I think this is to be continued. What we should represent is, because I don't think it will be done away with so easily, is at least some guidelines on this issue rather than merely going for every time going to the board.
Or a general circular, CBT,
yes,
absolutely,
clarification.
Absolutely.
See, for instance, the other part of it, Anil, because earlier at least, it said applied to charitable or religious purposes in India was the language.
Right.
Now, the language, if you look at 338A, it says while computing the regular income of registered NPO, the following income shall not be included. Income applied outside India by the board by direct that such income. So income applied outside India. It doesn't talk about for purposes outside India. And
right.
So that is where the whole problem is. And specified income, such income, if you don't take the CBDT approval, becomes specified income. So any portion of income applied by it outside India in contravention to the provision of Section 338. So therefore, that is going to be a real problem now. So that is this thing. So for instance, if I now today, what is application from India now? Therefore, this point about is it the situs of the activity? Is it the situs where the the liability accrued? What is the thing? And NASCOM was a case where there was an exhibition outside India, expenditure was incurred outside India. Perhaps those activities would still be hit, is the way perhaps one would look at it. But in the case of applied, as you rightly said that, so do you have to therefore look at whatever is that thing which I'm purchasing, the goods, the machine, plant, or the services which I'm purchasing, where they are finally utilized. the place of utilization is that that's where it's applied, perhaps.
As a matter of research on this, because I was to speak, uh, as far as the word incurrence is concerned, I even tested financial terms used in finance. Is incurrence attached? I incur, an entity or a person incurs an obligation or a liability. Is incurrence attached with situs, or incurrence is attached with the person? So I incur an expenditure. So I would believe that I incur the obligation, and
Correct.
then I
Where I confirm the contract, that's where the
exactly
situs are.
that's where the situs is. So
So
I think this is where
So you
So
need to,
anyway.
I think, this is something which is going to be a matter of, debate, I think, in the next few.
In fact, let me assure most of the participants, or at least some of them would be professionals. Let me assure you that litigation is not going to reduce. If my estimate is right, it is going to at least double, if not triple. That is what my estimate is. The appeals to the tribunal are testimony to what is happening. So not that we are happy with it, but that's what it is. So
No, and
those
the other thing, Anil, is frankly speaking, if you go to the CBDT, say to import a machine, medical equipment, would medical relief in India tend to promote international welfare in which India is interested? How do that's going to be the real challenge.
No, it's I don't know under how they will look at it,
Yeah.
but and in today's scenario where maybe foreign exchange is
Scarce.
scarce, it would be even more difficult possibly.
No, I know,
So
I appreciate, but maybe at some point in the future when things have eased up, I think
exactly.
it's time that one should make maybe a
No,
little
but
more detailed
this is an
representation.
aspect because there would be possibly a large number of trustees. Here we need to represent that,
Absolutely.
as long as we are establishing that the beneficiaries of our expenditure are India, I don't think the exemption should be issued.
In our living memory, CBDT had granted permission during the Nepal earthquake, where if you wanted to
That was a
buy
general
gold
purpose.
there, and they had even fast-tracked it,
Correct.
giving. But that's only within my living memory. Otherwise,
I think, Noshir, in individual cases they've given, when Ratan Tata had endowed a chair at Harvard University, for
Yes.
instance, I think that they had given that, it's a reported tribunal decision. So therefore, it's public knowledge in that sense that where
Absolutely.
the permission was given.
Absolutely. So there have been within living knowledge about this CBDT permitting, and one was a blanket one for Nepal earthquake, and they had fast-tracked it. I remember that. I mean, you can just do this now.
So one interesting aspect, and which people often miss out on, even under 11(1)(c) as well as now under Section 338, what happens is, even if you get the approval from the CBDT, that income is to be excluded from your income.
Right.
So which means for a 15% accumulation, it would not be counted. So that's something which you have to remember, I think, and that's a point
In fact,
which
Gautam,
perhaps.
while on that, what is your view as far as because today also under the Income Tax Act 25, if you donate to a charitable trust, only 85% is going to be treated as application, right?
Correct.
So the old proposition that the balance is deemed, or what do you do?
I think this CBDT circular should continue to hold the field.
I think so.
That's the way I think very
536 would
clearly.
take,
So I don't see that as a problem, frankly speaking, even under the new act. That's the
So Maharashtra Public Trust or
I think so Income Tax Act 25 again is, as you rightly said, we are going to test our abilities.
One more aspect distinct from the Income Tax Act 61 is the Income Tax 61 did not have a proposition that the trusts have to be incorporated in India. Now specifically that
Now that's
restriction is there, and maybe justified as well, because if you have to regulate, you would regulate Indian trusts. So I have no quarrel with that, but yes, that's a.
No, Anil, there are actually foreign trusts I know which had got permission way back in the 50s, 60s to set up branches in India, and they have been registered under 12A. Now, those sort of organizations will have difficulties now. I don't know, but one thing, some of them are what they call as companies, foreign companies in a sense, a foundation, etc. And they are registered under the Companies Act, under that thing relating to foreign companies where you're required to register. So whether those, on that ground they would be eligible is a question, which one would maybe have to look at. So. A
I
pure
don't know,
corporate
but
trust may not be eligible, but yeah. So
but
that
other
is
entities may be
may
eligible.
perhaps if it's a company, the thing which is under Companies Act, which has got so that's something which one will have to
No,
maybe.
because I thought the some parts are different. In fact, dividing this between that I think is giving more clarity, because I was telling my juniors here that now 345 and 346, see the difference in language of the business being incidental and the business being carried out in the course of carrying out activities are two distinct phraseologies.
Correct.
And I think rightly so, because what the Supreme Court referred to as the first 4 or 5 limbs are per se charity. So
Correct.
there, the law seems to be a little more liberal, saying that the activity can be incidental. But
Now
now,
the common thing being brought in, both having been merged, 11(4)A and provided to 215 effectively merged.
in
That's where the
fact,
problem is.
if you see, prior to 2009, Thanti Trust read the law as liberally as saying that if the proceeds of business are utilized for charity, that makes that business incidental. Maybe a far
Correct.
sweeping
Correct.
statement to make, but that is what 247 785 said. Now we have
Correct.
traveled a long distance from 247 ITR 785 to today's world. So
No, and in fact, one of the interesting thing is Tanti Trust, if you look at it, there were 3 periods that it covered.
yes,
And there was an observation in Tanti Trust that the activity of running of the newspaper was clearly not incidental to the activity of education, which was its object. Now, in Oda's case, the Supreme Court, to justify its reasoning, has said that no, Tanti Trust was a case where it was incidental, and that's where the Supreme Court said that, so which was completely wrong. The Supreme Court has explicitly stated that it is not part of its object.
That was business held in trust. Yeah.
Correct. It was a business held in trust. Exactly. It was a newspaper.
11(4)A applied.
Correct. Tanti Trust was a case of a newspaper being run, and the Supreme Court said that
Held in
running
trust.
the
Business
newspaper
held
was
in
nothing to do
trust.
with the
These are
object
two
of
separate-
education. Correct.
These
It
are
was
two
separately.
separate things.
Correct. And unfortunately, the way the Supreme Court order has to justify its reasoning has given that saying that no, Tanti Trust was because it was part of education.
While we are on streams of income, I think it is best time we clarify that when we are talking of business, it inherently means that we are looking at an activity which is carried on, organized or otherwise. So I think it's time to clarify that passive income. Let's express or have a debate on that part also. So, like rental income, because today, if your rental income is very high, I have 2 cases right now saying that because you are earning a tremendous amount of rent, you are doing business.
Incidentally, there is a Bombay High Court decision in the case of Shanmukanand Hall.
Yes.
So Shanmukanand Charities. Now there is an observation of the Bombay High Court, though that was not the main thing. The main aspect was whether revision was justified or not. And on that ground, they said that no, revision is not justified. But in any case, in just merely letting of a hall cannot amount to a business activity, was the way that Bombay High Court has.
It's income from a property of your trust. Property again can be
Only
removable. If you have movable property, you will invest in FDs, etc. Isn't it? And earn an income. That is not your business.
only I would caution trustees who may be hearing this is that in letting out of halls for marriages, dealing with a decorator is a common phenomenon, and we find that there are entities which are wanting to share in the spoils of the decorator's revenue. That could be a dangerous proposition in the sense that if you are saying that
sharing this, in the income of business, you're sharing
in the income of business, because
the contractor, I mean the contractor or the decorator,
that is
they take
something.
a percentage from them.
So when we say passive, something is adventure in the nature of trade would also be hit. So that is something one.
And also under GST, you become a mandap keeper.
So those are
So incidentally, Anil, there is a way of structuring it, perhaps and which we've seen in some trusts. We've done it, I think, where you give it to the food contractor or the decorator, saying that okay, you let the hall on rent, etc. You give me a monthly rent.
Right.
So there, very clearly, yours is a passive activity. It's the food contractor or the decorators who's running the business there, and accordingly.
So, Gautam, the advice would be that you eliminate the activity and you eliminate the risk. If you do
Exactly.
both, then possibly you will get out of
Correct.
the tenets
Absolutely.
of business
Absolutely.
totally.
So you're
That's
correct, which is very clearly, and then every 2 years or 3 years you reset the rent, so that that becomes a much easier this thing. So that's
I think
the thing.
Maharashtra
Yeah.
Public Trust
So
is something.
yeah, now Maharashtra Public Trust
that
Act,
is
now
the
that is another thing. Yeah, which is, I think,
A hot
you have
subject
this.
right now.
Yeah, which is a very hot subject before the Bombay High Court being hotly, the newspapers, we read so many articles about it and comments about it, charity commissioners' letters, stay, etc. on meetings. So we have this Maharashtra Public Trust Second Amendment Act 2025, and you have this new Section 30A, which is inserted with effect from 1st September 25. And there they've said, what does the section say? It says when a specific period of appointment of a tenured trustee expires, then, notwithstanding anything contained in the trust deed or any decision of the trustees, such tenured trustees shall cease to perform function and discharge duties as a trustee unless and until he is reappointed. And then it goes on to say that where the instrument of trust silent or does not expressly in the trust deed or any decision of the trustees, it shall be lawful for continuing trustees to unanimously appoint a trustee for a period of up to 5 years at a time. And if the trustee does not have a specific provision for appointment of trustee as a perpetual trustee, then notwithstanding anything contrary to the usage of the trust or any decision of the trustees, the number of perpetual trustees at any point of time in the trust shall not exceed 1/4 of the total number of trustees. And a tenured trustee whose period has expired can be appointed as a perpetual trustee against the vacancy of a perpetual trustee arising on account of death, etc., but not against resignation. Resignation is missing if you see in that. That is the thing. Now, Noshir, if you may just the thing. So, a few thoughts on that. One is, that if you look at Section 46 of the Indian Trust Act, 1882, the basic concept of a trustee is that, though, I mean, technically speaking, the Indian Trust Act does not apply to public charitable trust. But the concept of a trustee is that a trustee is always perpetual unless he's appointed for a specific period of time. That's been the understanding that we always had. That 46 says that a trustee who has accepted the trust cannot afterwards renounce it except with permission of a principal civil court of original jurisdiction, or if the beneficiary is competent to contract with his permission, or by virtue of a special power in the instrument of trust. So, therefore, there has to be a power again in the trust deed to accept resignation of a trustee, and that's only where he can resign or this thing. That's something which now various issues come up on this, and maybe you could elaborate on some of these. That if the trust deed is silent, and particularly for vast majority of trusts, I think the trust deed is silent. Trustees are appointed, and the understanding was that they are trustees for life now. Now, what happens? Do all the existing trustees become tenured trustees, or whether it would apply only to appointments after 1st September 25? From what date do they become tenured trustees? When does their tenure expire? Then, if that limit is exceeded, do the existing perpetual trustees have to be converted into tenured trustees, or it applies only on appointment of new trustees to fill a vacancy or as any additional trustees you appoint? And then do you have to file change reports when a tenured trustee is reappointed or when a tenured trustee is made a perpetual trustee or vice versa? So these are all the issues which arise. Noshir, maybe if you can throw some light.
Sure.
What is this?
These are all very valid and interesting questions. The thing is that I think even the government of Maharashtra doesn't have an answer to this, if you ask me. And I'll tell you because we have had some interactions with the department. I mean, yes, this has come into force from 1st September 2025. Do the trustees simply by a resolution can do that? That, okay, I mean, we are all going to be 10-year trustees and we are now agreeing that after 5 years we will reappoint ourselves, or we are making somebody, or do we file a change report, or worse, do we go for a scheme of management to amend the trust deed itself? Please understand that this applies equally to charitable trusts and religious trusts. There are close to, I think, more than 6 to 6.5 lakh charities involved over here. And I think most trusts do not have this system of tenure. This election and change usually is there in a society. And all societies are also trusts, but societies will obviously have
their own election system.
They will have their own way, and Section 8 companies are also. But over here, I think so far the position was that if the trust deed has not put a tenure, then you are deemed to be trustee for life unless you voluntarily step down. or you die, or perhaps you have become mentally unstable or whatever. I mean, those general provisions or insolvent, blah,
Correct.
blah, blah.
Incompetent to contract.
Yeah, incompetent to contract, etc. But otherwise, you were deemed for life. Now, this has been brought into. Now, is this applicable prospectively? Or is it going to be retrospective? If you try to do this retrospectively and try to enforce it, will a simple resolution do? I think not. They will want to have a procedure in place. So they will either say, make an amendment for amendment. What is the provision under the Trust Act? They will again bring in the 50A thing, or they'll say file change report. You file change report, 6.5 lakh charities, and they are going to process these many applications, whether for amendment, etc. It will become the same thing about the irrevocability clause. I mean, the department will be inundated with applications, which they will never be able to handle. So the implications are enormous. I think this can be perhaps brought prospectively that new trusts, when they are being created, you can have this, and this can be made applicable for maybe even trusts that were established after 1st September. But if you're going to do this retrospectively, it's going to be a very, very practical nightmare, both for trustees and the department itself, if I may say so.
Yeah.
Department
Existing change reports. Yeah,
Will
existing
be-
change reports.
exactly.
There's a backlog. Huge
Ordinary
backlog.
change reports are not getting processed. Think of 6.5 lakh applications falling on them, and temples, etc. I mean, think of it, because it contains religious and charitable trusts. It's applicable to all. 6.5 lakhs. Are you
Absolutely.
even equipped to handle this?
Absolutely. No, in fact, Noshir, there was this committee which was set up 2 or 3 years back, 3 or 4 years back, remember?
Yes,
And
I
the committee
remember.
had given a very good report, and from what
Yes.
because a couple of members I had talked to, and they said we've given a good report and all that, that just like the Companies Act, you have a situation where you just do a filing and it's accepted automatically, deemed to be accepted unless there's an objection raised by somebody.
So either they will make those kinds of things that, okay, you have a, I mean, see, in a trust, if a trustee resigns, change report has to be filed and the order is not passed. Whereas if you're a Section 8 company, in real time, you just put a scanned copy of the resignation and in real time, your change is effected.
No, Noshir, even if a person, trustee dies, you file a death certificate, and
Yeah.
still they insist that you have to come, you have to attend, and then you will take the death on that.
So this department unfortunately functions like a district court. That is the difference. Whereas that under the Companies Act or in other places where there is no charity commissioner, simple things like deed of amendments are made. The trouble is only with Maharashtra and Gujarat, and to some limited extent in Rajasthan and Madhya Pradesh, where there is a CC's office and a trust, a state relevant trust act is in force. In other places, this is not really a problem.
And not only that, what has happened is also you have that Section 50B which is inserted, and which will take effect from a date to be notified by the state government, where the powers of the city civil court are also now being, to
Yes.
take schemes,
Yes. Yes.
that is to modify.
So more and more powers are being
taken with charity commissioner.
Exactly.
Question is, where do they have the bandwidth to handle that?
See,
And
again, the intention is good that you don't have to go to the court at CC's level. It can be done, but the department is not equipped to handle it.
correct.
That is the trouble. And this is despite all the contribution that once upon a time we were paying. Of course, that's another kettle of fish I don't want to open right now. But,
Correct.
the High Court has lifted that order. But we don't know from which point he will start charging contribution.
So
Gautam,
we are all at
just-
sea on these amendments.
We have to
Gautam,
wait
just-
and watch is what I feel.
Just
Yeah,
something that
sorry.
occurred to me when Noshir was talking of the FCRA amendment, which is still in proposal stage, that if a part of the assets were to be confiscated or be on account of an FCRA situation, would there be an impact as far as accredited income is concerned? Because because one thing
Yeah,
may lead to
absolutely.
another.
Technically, certainly.
What happens? Correct.
Technically,
What happens?
certainly.
If that happens, in fact,
Yeah.
while on that,
Income tax doesn't have a provision for that as yet.
The thing is
As-
that
No,
laws
in
are
fact,
amended.
Anil, today also we've had cases where a trust, this thing has been cancelled. So they've been told that, okay, don't deal with your FCRA account, let the balance be there. Now, because of that, they're not able to spend that 85%. Income is accruing on that, and they're not able to spend it. Now, I mean, obviously, so there's consequences that they end up paying taxes on that. There's unfortunately no such this thing on that. That is one of the biggest difficulties which is there.
One more aspect which remained, you covered in the context of voucher genuineness. There is also one more clause that the charity commission, the commissioner needs to examine is compliance of such requirements of any other law for time being in force by the trust or institution as a material for the purpose of achieving objects. This
Correct.
also has been, judicially tested, but this is also one aspect which I think one may deliberate on. In the sense,
Correct.
what do you look at? Because we have in the past, decisions of the tribunal taking a view that yes, you may violate the Capitation Fees Act, but does it really,
Is
affect
material for the
your
attainment of your objects, correct?
very honestly, I would
It
believe that
possibly
the answer
is.
is yes.
That could be.
Because,
But no, but take a situation like Maharashtra Public Trust Act, for instance. Now you've not taken approval of the Charity Commissioner for borrowing, for instance.
right.
Now, is it material for the attainment of your objects? Is that the thing? Or you've not filed a change report? I mean, a procedural violation, for instance. Now, those are things which really should not, the same. Or your FCRA return you've not filed, for instance. Now, is it material for the achievement of your objects? I mean, these are questions which really
So primarily one should restrict oneself to
your activities. What is the
Activities.
activities? For that, what are the laws applicable to those activities? And that's the way perhaps one would look at it.
I think that's how one, because there is also one more area where at least the department, the commissioner exemptions department asks questions on this, that what is the violation
Yeah,
of this?
correct,
So
absolutely.
maybe like this.
Correct.
I think we have it seems that there are fair amount of questions.
Large amount of questions. I think maybe we
Would
could
we
now
like
get to the.
to take them or?
Yeah, I think we could take the questions now because broadly, I think we've covered most of the areas which we wanted to cover.
Because we did not
And-
want to get into the sections themselves because that.
Correct.
No, we didn't want to make it a
No, the
technical
whole
session.
objective was to discuss some of these issues which are happening and how they are. So I think the first question is it mandatory to get the approval from commissioner exemptions to make changes in objects clause? 10AB was rejected for this reason, although the change was in conformity with the main objects. Anil, if you would like to take that question.
Yes, there the proposition is like this, that since we are on registration again, let's get back. The old 12A had when you made an application, you made an application in a form, and there was an undertaking which you gave that if there are any changes in that, in fact, that undertaking was as severe as to say that any change in objects, regulations, etc., I will be intimating forthwith. Unfortunately, the law did not provide for any consequence of non-information or non-informed. Therefore, in 2018, they made that amendment by way of insertion of 12A is 1AC, where they now said AB, saying that now you have to, if you change your objects which are not in conformity with the conditions of registration, within 30 days you have to file such an application. So while changing objects in Maharashtra and Gujarat, you have to, you would obviously have to seek permission of the charity commissioner, because that, as Noshir mentioned, 50A or otherwise you will have to comply with. And as far as income tax is concerned, you will have to, look at the 12A amendment. But the conditionality is that it has to be a change which is not in conformity with the conditions of registration. I'll give a small example. Suppose you have an educational trust. You decide that earlier you had only publication of, say, books, etc. You now want to add a digital medium or computer education or distance learning. That, to my mind, is not a change which affects the conditions of registration. So therefore, if it is something which is only ancillary to your objects as they originally stood, then to my mind, you don't need to make a change. Or the second example that I would give is a change in powers and not objects. There is also one concept which we need to understand, is that there is a distinction between objects and powers. You may, by your trust deed, grant certain powers to do XYZ things. If those powers are undergoing a change, then of course you don't need to make an application. Though, of course, knowing our, the way the law is dealt with, it would be better to be safe rather than and make an application if you have some doubt in your mind.
Yeah. Anil, the next question is also on 12AB, that we filed 12AB renewed with application for delay, condonation of delay. What will be the stand of the CIT exemption in this case?
You filed it with condonation of delay. Okay. Now I think things may change for the better. There is hope. So that is all. And if you have a reasonable cause, I think there should not be a problem, because in fact, that is what I wanted to say. The earlier law of registration was far more simpler. Today, undoubtedly, you have streamlined the process, but the number of clauses that you have made, first, with whether the activity has started or not, whether it is not started, that makes it complex. And what has happened in many cases, why have these problems arisen, is that in 2021, many entities simply got, old entities got provisional registration, and that has, compounded the problem. So they got provisional registration of trusts which were, well up and functional, but they got provisional registration. They naturally did not act. So by the time they came in for renewal, you have all these problems which are arising. Yeah.
So next question is by an anonymous attendee. And he said that express irrevocability clause is insisted to ensure fairness and also to avoid any future contradiction by the authors that may lead to litigation. In this regard, the department's stand is justified. The amendment to the trust deed is a one-time requirement in its lifetime of the trust, and the trustee should do it without demur. The officers obtaining undertaking by the trustees to appropriately amend to include any missing clause in the trust deed at the earliest available occasion for amendment. These are necessary for good amendments. Why should the trust go to the court instead of complying with this condition? So I'll just want to here point out what the judge of the Bombay High Court says. One of the points which was made by the department in the course of these arguments is that the department cannot go through the entire trust deed to find out whether it is revocable or irrevocable, and therefore they are insisting on this irrevocable clause. The judge says it is the obligation under the law, it is the obligation of the department to go through the trust deed. They have themselves laid down this law that yes, we will. You have to file this thing, and it is to be examined. Now, given that, is it that the department is trying to shirk its duties now just to make life easier for the department? You should undergo all this hardship. I don't know whether the author the person who has asked this question, has ever had the occasion to make an amendment to the trust deed. Please do it once, and then you'll realize the expenditure, the amount of effort and this which is required, and the problems which you face at the Charity Commissioner's office. All this will make you realize that why making thousands of trusts go through this torture just because you feel you are not sure about the law. That's the whole basis on which these trusts have gone to the appeal. I think Anil or Noshir, if you would like to.
I think you have summed it up aptly. I mean, the process.
I think, and if at all, let's put it this way. Like Noshir rightly said, in the context of the Maharashtra Public Trust Amendment, if the dispensation wants this, then if at all the law is to be amended, let it be amended prospectively. Any new trust you want to insist on, though, as I entirely concur with the ratio of the Bombay High Court judgment, but still, you want to make it explicitly clear, you can't affect entities which are there existing for donkey years.
Also, I would, sorry, Anil, go ahead.
So therefore, if at all you want to make a change, like we are saying in the case of charging standards, make a prospective change. So make a prospective change if you so want. There's no.
So I'll just tell you, a few months ago, I was speaking to a professional chartered accountant in Ahmedabad, and he was saying the Charity Commissioner's department in Gujarat has been more reasonable. That unlike Maharashtra, where if you want to make any change, you have to go through a scheme of management. The Gujarat Charity Commissioner said, you just file a simple change report with my department to say that the trustee is resolved, that this is an irrevocable trust. He took that on record and he says, okay, that's it. Now you can give this to the income tax department that you have filed the change report. Yeah. And Gujarat has worked seamlessly in this. This was so good. You just file the change report to say, okay, the trustee is unanimously resolved. It's an irrevocable trust, and that was end of.
Which is fine. That sort of thing, if it was there, it was fine.
But simplicity. There has to be seamless and simple. But if you are saying you have to go through a scheme of amendment, and where the Charity Commissioner will say, okay, you have to get a lawyer to represent you, or all the trustees have come to me together. We know that this department functions like a civil court over here, or a district court, or whichever way you want to look at it. then it's so make the process at least for amendment seamless and simple. Then I'm willing, I'm game. Who wants to say that we are a revocable trust? We all believe we have irrevocable trusts.
Anil, again, next question is whether an educational institution registered under the Indian Trust Act erroneously in absence of State Public Charitable Trust Act and claiming exemption under 1020C can be denied registration under the new act if it aspires to register itself as a registered NPO because of its registration being under the Indian Trust Act.
Now, technically speaking, it is committed because in Maharashtra, if you are carrying on an activity, educational activity, your registration under the Maharashtra Public Trust Act would be a mandatory proposition. But having said that, the question therefore is that if it is not registered, because earlier the proposition, particularly in the context of 1023C, some categories of entities, those small entities, was that you did not require registration under Section 12A. According to me, if you are able to establish that, yes, you are a genuine charitable trust, not committing any violation, because this is a technical violation, not affecting achievement of your objects. And therefore, to my mind, yes, you should, of course, comply with the law, but that by itself, to my mind, would not, await a registration under 12A. That's how I look at it.
Also, I want to add to this point that many NPOs seem to be under this myth that outside of Maharashtra, when they register, they are registering under the Indian Trust Act. That is absolutely wrong. You just create a trust deed which you are registering under what is known as the Indian Registration Act.
Registration.
But many people seem to think, okay, I mean, in Delhi, Bangalore, I am registered under. So I think this myth also needs to be clarified that you are not.
Sure.
You are under the Indian register. You have registered your trust deed, and trust deed is all that you need because it's a legal obligation. It's not a body corporate. Just like a will go and register a will. This is somewhat similar to a will, a trust deed.
Then I think next question is whether SLP has been filed before the Supreme Court against that Bombay High Court decision. No, as we mentioned earlier.
As of now, no.
Nothing.
I would say let them file it once and for all. This matter will get resolved.
Correct.
I mean, that's a personal view. Everybody may not subscribe to it. I would say go ahead and do it.
Next question is under FCRA for you, Noshir. If a trust registered under FCRA and was receiving foreign contribution in earlier years, it has earned interest from FCRA account from bank during the year. The registration of FCRA has been kept under suspension during the year. Income does not exceed rupees 5 crore during the year. In view of the fact that trust has received FCRA foreign contribution by way of interest on bank account, where the applicable form to be filed, of course, this is income tax 10B or 10BB is the form which is.
It's again about income accrued or
no, the income. Yeah, the form 10B is the form when you have received,
FCRA.
interest. Yeah. So, question Anil is that interest under FCRA Act is regarding contribution. Now, it's not a donation. Technically,
once you have a foreign contribution, 10B applies.
Correct. It's part of
the safer course. The safer course is applied 10B is the same.
Yes, 10B will only apply.
Correct. Then the next question is in Rajasthan state, there's Society Registration Act, and mostly all societies are registered under Societies Act. But CIT exemption is rejecting 12AB renewal on demand of registration before Devasthan Vibhag under the Rajasthan Public Trust Act 1959.
That must be typical to Rajasthan, but I mean, please understand that all societies in Maharashtra, Gujarat, and these 4 states I named, by default are also required to register under the Trust Act and are deemed to be trusts. So in these 4 states, all societies, although they'll function like a society, they will have, instead of a trust deed, they will have a memorandum and rules. Despite that, they will be all deemed as trusts. In Maharashtra, Gujarat, Rajasthan, and Madhya Pradesh, and this by itself is enough. I think any other registration that is sought may be very state-centric, and I mean, offline, this person is welcome to contact me, and I could look at it with deeper introspection in that regard.
Yeah. So another this has pointed out that even in the new form 105 in clause 6 has still had question regarding irrevocability clause. Now that I think we'll have to wait for the CBDT to give.
This is why I'm saying let the SLP happen. Let's finish it one way or the other. This is why I say it.
So then, which other states apart from Maharashtra and Gujarat have Charity Act? Which
Rajasthan and Madhya Pradesh. Now, there are endowment acts in South India, but those are for religious.
Even Andhra Pradesh also there is now some act, because in the context of New Noble, the Supreme Court did refer to that. I think in Andhra Pradesh also there is something which is now.
So, but by and large, these are the more active places where there are charity commissioners. See, in those early days, most of the charitable trusts were created in Western India. Because these were the hubs of commercial wealth, etc. And companies were creating their trusts, and families who had wealth were creating trusts. So this has been very Western centric. But Societies Act is in every state. And of course, Indian Companies Act is a pan-India law, but trust is a very state-centered act. And while principles of the Indian Trust Act would apply in states where there is no Trust Act in force, but otherwise, the main states having a public Trust Act in force is Maharashtra, Gujarat, Rajasthan, and Madhya Pradesh.
Yeah. Then somebody asked for the name of that case. It's Ila Rajesh Foundation. So that's the thing. Then another question raises the registration application has been rejected on the ground as infructuous. What is the remedy? Now, this infructuous was cases where you had a duplicate application, and that's in those cases only we found that, there was a duplicate application made, and that's why it's been, one application has been rejected as infructuous. So you may want to check, that by mistake a duplicate application is made or what has happened. Instead of 12A and ATG, maybe two 12A applications were made or what has happened. That may be a question which you may need to.
Correct.
Then the next question is Darpan ID compulsory for trusts?
Yes. So earlier on, only if you received central government grants or FCRA, you were required to have Darpan ID. But now the Reserve Bank of India circular that or notification that has come out has made this some kind of a KYC for banks. So most of this is enforced now by banks.
Anti-money laundering provisions.
Yes. So if you have a Darpan ID, then that is considered as your kind of a KYC for an NPO, being a trust society or a SEC. So yes, therefore, NGO Darpan earlier had only a few thousand registration, but ever since the RBI directive came, now you will find that the number more or less matches with the tax exempt number of organization, which is about 4.5 lakh or thereabout. I don't have the exact number.
Yeah. Then next is on income tax again. GPU trust doing charitable activity from source of rent of properties and donations. Whether earning of rent requires separate books of accounts, and what is the effect of Supreme Court case in New Noble? Anil?
No, New Noble and ORDA are different. New Noble is only on the proposition that whether you are existing solely for education. A source of revenue or a revenue stream where you earn from interest by itself does not mean that you don't exist for revenue. Your existence qua a charitable trust is based on your objects and your activities qua your objects. Your revenue streams, as you said, are rent, and the other is, of course, voluntary donations. We have consistently taken a view that rent is not an activity per se, unless, yes, you are engaged actively in the sense that, as Gautam rightly pointed out, that if you're giving this renting out to somebody else and taking, that would be the easier proposition. The only thing that the department may take a view that, all right, you're having an organized scale of activity, whether you make bookings for marriage halls. And also in all this proposition, there is one important thing, is that the premises which you are letting out and rent, it can be two categories. One category is where you have invested in immovable property and you are letting it out. That is also a passive stream of income. Or you have premises which are ordinarily used for your objects themselves and are in periods in which they are not used for your objects are being let out. So these are the normal two categories. Now, in either of these two categories, if you take reasonable care to ensure that it is not, in the sense, an organized activity requiring human intervention of trustees, it would be passive income and not business. That is what the view I would take.
The next question is, will the proviso 215 apply if the objects carried out are mixture of main limbs of charity and GPU? And what if the main limbs of charity carried out by the trust is not mentioned in the trust deed?
Main limb of?
Charity,
Trustee.
the first 6 limbs of charitable purpose.
That is not mentioned at all.
So, those limbs are not mentioned. It's only general public utility which is mentioned. And objects carried out are mixed. So
what we are seeing is that the registration is based on the objects as they stood at the time of registration, which do not specifically in the question of the queries cover education, medical relief, etc. That being the case, you are carrying on an activity which would be covered under general charity. So the safer proposition and the safer interpretation is that you fall under GPU, and whatever the conditions are for claiming an exemption under the old law, the proviso to 215, and under the new law 346 would apply to you.
Gautam, excuse me for just 2 minutes. I need to
Sure,
use
sir.
the bio break
Sure.
quickly.
Yeah.
Sorry.
So,
Yeah.
Anil, the next question is also on income tax. A trust running a dharamshala besides earning rental income from letting out trust property, whether proviso to 215 applies.
The question is, it is running a dharamshala.
Dharamshala besides earning rental income from letting out trust property. So, dharamshala, whether this should amount to a business.
According to me, see, the point is that the only, which is a welcome change, I would say. Earlier, if you see 215, though couched in inclusive language, did not include the word religious purpose specifically, which now the law in Income Tax Act 25 includes. Now, if it is specifically included, and therefore, if the registration would take place now, then maybe one would be able to urge that this is not GPU. But yes, dharamshala inherently would be including, including provision of food, provision of accommodation, cleanliness, and a fairly organized activity. So if the registration is taken now and you consider a religious purpose as charity, the issue would be that in the earlier proposition, maybe it could fall under GPU. Today, if public religious purpose is separately mentioned, can you then say that you fall under 345 and it is incidental to your objects? In either cases, or both cases, under the 61 Act and 225 Act, it is essential to maintain a separate set of books, because a dharamshala has to be run in an organized manner, and therefore it would, to my mind, partake the character of business.
The next question is on 22(3)(a) of the Maharashtra Public Trust Act permits the Charity Commissioner to re-register trust on certain grounds. One such ground is in the case of revocable trust where they are revoked. This implies that a charitable trust can be revocable and also is entitled to registration under the Maharashtra Public Trust Act. So to that extent, the comments made earlier do not seem to be correct. Now, I'd just like to point out that yes, you are correct in a way, and the Bombay High Court did examine this in paragraph 18 of its order, and it said that even section 22(3)(a)(d) refers to trust being revocable is expressly revoked, meaning thereby that in order that a trust is a revocable trust, a power to revoke is essential. In other words, the trust deed should have an express clause enabling the settlor to invoke the same and revoke the trust. So that's how the Bombay High Court also interpreted it. So that's what Bombay High Court said, that yes, but even in the case of a revocable trust, if you have a power of revocation contained in the trust, it to be registered in the Maharashtra Public Trust Act. But when the trust is wound up, that funds necessarily have to go to the Public Trust Administration Fund, and it cannot go back to the as per the trust deed, is what the Bombay, because the act would override the trust deed, is what the Bombay High Court. If you read that paragraph 18 carefully, you will understand that. So next question is, submission of fire safety certificate is one of the requirements as per the notice issued by CIT exemption. Bangalore ITT in the case of Arata Senior Citizen Care Center held that fire safety certificate is not mandatory for trust approval. Anil, want to comment?
Now this is fire safety. It's like this, that of course it's definitely a violation. Now it's the question of what your nature of activity is. If your nature of activity is education, or maybe where public enters, I think a fire safety is something which is, it may not be, the question would then rest upon, is it material to achievement of your objects? This fire safety certificate by itself would not aid you in carrying out your objects. So to that extent, it is not material. But yes, as a fallout of that, are you not endangering lives of people who enter your premises? So to that extent, I think it would be appropriate to obtain a fire safety certificate. Though, of course, it is strongly arguable that, yes, it is not material to achieving my objects themselves, unless, as I said, it's an educational institution where, of course, students are there for large parts of the day. Maybe this is an arguable proposition.
So, Anil, the next question is about, I'm skipping a few questions because of the shortage of time. I think we'll try and cover the important ones which are there. So, if a trust educational programs are attended from across the globe and the trust specified in its pamphlet time of its programs in different jurisdictions, can such an activity be considered as activity extended beyond the territory of India denying registration?
So, what the querist wants to say is that you are then the beneficiary of your activity is a person outside India. To that extent, yes, because ultimately you are seeing that the beneficiary of your activity is person outside India. Whether that by itself would be, I frankly do not think that would disentitle you to registration. The question is that so important, in the sense so material as to result in carrying out a charitable activity outside India? I am presuming that your activities are, or your fees are not having a significant amount of markup, which means you charge fees only to cover certain cost. In that scenario, if you were to, put your pamphlet says that even person outside India could avail the benefit of your services or your programs. I think that unless it is material, I don't think it should really affect your exemption. And even in that case, what I would believe is that to the limited extent that because it is your revenue stream that is coming from outside India, there does not seem to be any application outside India. The query seems to suggest that there is a purpose outside India, and therefore even a purpose outside India under both the old act and the new act is permitted. Only thing you will have to seek CBDT approval. That is how I would look at it. Does your permitting the other students constitute a purpose outside India? Is your purpose to render services or education to people outside India, or it's a mere incident? That is how I think things would.
But I would draw a parallel even for the charitable hospitals. Don't foreign citizens come to avail of medical treatment at our charitable hospitals in Mumbai, etc.?
I think this is but yes, if tomorrow on record then it is established that your timings are such that it's a majority of students outside India taking benefit. I don't know how far it would.
Yeah, if you're targeting only students outside India primarily, that may be a little difficult.
In fact, I was advising some hospitals, and then I told them that while yes, foreigners can come here and avail of medical services, no doubt, but to promote your hospital outside India and pay a facilitation fee for that purpose could be dangerous. Then
medical tourism.
Yeah.
Medical tourism, literally.
If you are merely making available the information qua your services, then yes, why not?
Agreed.
Otherwise, that we are on little dangerous territory.
Correct.
Agreed.
Yeah. Noshir, we'll take the last question on the Maharashtra Public Trust Act, and this is on this contribution. That this High Court has lifted the stay. Now, what would be the position on that? If you
so the stay has been lifted, but the Charity Commissioner has not yet told us whether it's going to be 2%. Remember that the law is very clear since 1950 that the Charity Commissioner is empowered to lay contribution. By the way, it's not a tax as many people think. It's a contribution to maintain the department up to 5%. Then, there have been subsequent issues taken to the court. Now, oldest one was by one of the organizations, and it was brought down to 2%. Then when the RTI came in 2005, some public spirited individuals wanted to know how much contribution was the Charity Commissioner sitting on. It turned out to be a very large number. That led to the PIL, where the court put the stay since 2009. Since 2009, Question arises whether this will be with retrospective effect. I think not. From the way I've read the High Court judgment, can only be prospective. Now again, it will be 2%, 3%. They are allowed under law to charge you up to 5%. So far, there has been no directive that has come, but many people are staying ready for it. That's all.
A new notification will come.
A new notification which has not come. Ditto for this. I mean, tenure trustee, where is the notification? You have amended the act, but what do we do now? Resolution, amend the deed.
So,
What?
in fact, that is the question that is asked to us as auditors always, that would you suggest a provision in the accounts for a possible
Exactly.
liability?
So, there's no clarity. I mean, the State Department is as clueless as we are in all these matters. I mean, they have passed the act, but now they don't know what to do next.
Yeah. Okay. I think, yeah. So therefore, I think we've had a very interesting discussion. So Noshir and Anil, thank you very much.
At least we enjoyed it. We don't know.
Yeah, it was.
I can
it was
say that
really-
I thoroughly enjoyed it.
Absolutely. You were thoroughly
Sorry, I was
enjoyed
very
because-
frank, and I probably, but I mean, I think things have to, I think we are at a stage in life where we have to speak the truth. I mean,
Yeah, no, and these are all issues which some of them there are no proper answers.
and I want to add a caveat that whether we like the law or not, I always tell my people, you comply with this. I may be critical of this, but I always say, Baba, if this is the law of the land, we will comply. And my job is to tell my friends that please comply with it, although I personally don't like what is happening.
Correct. Yeah, I think with that, I think I'll ask Ritwik Sangvi to propose a vote of thanks. And
Yeah. Yes. So many thanks to all the panelists and the moderator Gautam Bhai.